So, Euan, you commented earlier on this morning on the broken U.S. gas market, which Arthur has demonstrated that there are many things that are not well. Do you still hold? You offer 3 solutions for the gas market, I think, and all of them included either government interventions or nationalization, and no sort of let the market see what it does. What's your take on that? Why can't we let the market run its course in the United States in the shale gas situation?
Yeah, well, I guess, is that working? Yeah. The first point I should make is the impressions that I have formed about the US shale gas are based almost exclusively on Arthur's work. So that's partly giving Arthur credit, but it also means there may be perhaps a bit of self-reinforcement going on here. The main comment I would make now in light of Arthur's presentation is I really wonder if there is any positive energy return, any more positive energy return to be had from drilling shale gases. Both your presentation and Werner's presentation really gave me the impression of a hamster on a treadmill running flat out trying to generate enough energy to keep itself warm. Something of that sort. It seems to me that the sweet spots have been drilled and are producing at a loss, and to offset the declines from the sweet spots, we now have to drill even more. And these are staggering numbers for investment. And why on earth would companies make those investments when they know the outcome is going to be to keep the gas price below the level at where they're going to make a profit? And I suggested 3 alternatives, Arthur, which you may want to comment on for how this conundrum could be overcome. One is that the major American companies form some kind of price cartel to support a higher price that would make the shale gas profitable. The other would be that the government actually nationalized the industry and could therefore absorb the losses. And the third would be to rig the taxation system against conventional gas, thereby increasing the competitiveness on shale gas. I don't know if you would care to comment. None of those outcomes actually seem plausible to me. And if the fact is that future shale gas is going to be produced at an energy loss, then it's just never going to happen. Someone someday will suddenly realize that they're just wasting huge amounts of resources.
Well, I agree with your observations, Euan, and I further agree that none of the 3 options are in the United States, either legally or from the of American sentiment. My sense is that the end is nearer than we think, and that in fact forces will cause such stress among the weaker of the shale gas companies. I mean, watch Chesapeake is clearly in the focus right now. They need to sell about $10 billion worth of assets just to meet operational obligations for the rest of 2012. So my prediction is that we will see some major restructure of companies in the shale space, that some of the more heavily gas-weighted companies that have a lot of debt will fail or at least get into deep stress. They will be acquired by the larger companies, the Exxon Mobils, Chevrons, ConocoPhillips, and perhaps the larger companies that have to return value to shareholders will cause some sanity to this process. So,
Arthur, if you look at the market economics, would one expect that from your data that if we stop drilling or keep drilling at the same level, production would fairly quickly decline because of the high decline rates? But how do you see the lags between companies investing, going bust, and supply occurring? Is there a stabilization point where we could say the market has solved itself by the price increasing to the level it needs to be? Or is that simply not feasible because consumers can't afford these high prices? What is your take?
Well, my take is that consumers, and I'm one of them, are getting a tremendous bargain right now. Personally, I think that natural gas at European prices is still a good energy value, and if if natural gas prices equilibrated to something close to European prices, then a lot of the ventures would be profitable and things would be correct. Part of the confusion in all of this, as I mentioned before, is that we simply don't know how many wells have been drilled in the last 3 or 4 years that have not been connected to gas sales yet. And this could be thousands of wells. So that's the lag effect that you talk about, Rembrandt, that if we only had the wells that are currently producing, I think it's pretty clear that by sometime in 2013, prices would begin to climb upward. They're already climbing upward, and would probably reach somewhere in the $4 to $5 range by 2014, which is still not commercial, but it's approaching commerciality. There are several permits that have been granted to export liquefied natural gas from the United States to Europe. If these things go through, of course, that won't happen probably until 2015, but that will drain a lot of supply, and that will put upward pressure on price, basically causing some equilibration of European and North American gas prices. So I see a solution in view. It's just a question of which companies will be able to survive over the year or two that price equilibration occurs in.
Werner, what's your take on the price in the European market in this issue? Is that much more because it's much higher, 3 to 4 times as high, so it should be commercial over here too, at least if you have the resources, or not?
Yeah. First of all, if I compare the first drill wells, which are hoped to be drilled in Austria by OMV, the first 2 are claimed to cost 125 million euros. And this is more than $1 euro per cubic meter. So you need to increase your prices a lot until this becomes commercial. And even the companies, when we talk in behind the doors, they say certainly it's not commercial at present. But when I say if you would believe that prices would not rise in the future, then you would stop drilling. Then they just smile and say nothing. So of course they expect rises will price, and this is a strong contradiction what is claimed by the golden age of gas. People claim gas becomes so cheap that even investments in renewables do not fund themselves. So this is a contradiction which can only be solved that they expect prices will rise tremendously.
So it might remain cheaper to import gas than to produce it on our own soil.
Probably. And even the quantities in Germany, they will be very, very low. It's an illusion to be, even if they would ease the environmental rules, it's an illusion to believe that it can have a huge share, can substitute for imports. That will not happen.
Is there anyone in the audience who would like to give a comment or a question?
Good afternoon. I'm Pedro Prieto from ASPO in Spain. I would like to make a question to Euan, Mearns, or any of the speakers, because I guess that you have been talking about the ROE of unconventional shale gas and oil shale. And I guess that this is for the States and probably also for Europe, where basically big infrastructures are already built up in the country. I mean, in terms of many roads, electric power lines, or equipment goods not so far from the wells or from the basins and something like that. Do you have any idea of how and after that you have shown that the return, the energy return on the energy invested is very, very low in the case of this type of gas. Do you have any idea of how much the return could even be lower in trying to explore remote sites, like, for instance, the ones claimed by Repsol in Argentina, in Vaca Muerta, which are in very remote areas where the pipes will have to travel plenty of hundreds of kilometers, or the big trucks to take the fuel will have to return in hundreds of kilometers before going to a station or something like that? Do you have any idea of how the energy return will decrease with, when trying to exploit shale gas in remote places without infrastructure?
Yeah, we were involved in some calculations in this Infradialog process in Germany. And it strongly, of course, depends on your assumptions. And the basic assumption is, how much gas do you earn with one well? And this is because we do not have a producing well yet, so it's quite unsure. But based on data on estimates from the industry we got, the energy return of invest strongly depends, of course, on the depth. And in that calculation, in the worst cases, with 2,500 meter well depth, we needed about, how to say, if you if you produce 5 cubic meter, you need 4 of them just to keep it running, and 1 cubic meter would enter the market. And this would be even worse if you want to produce electricity, if you want to avoid emissions, which in these cases are higher than from coal. Then you need renewable energy or electricity, clean electricity for the compressor stations and so on. And then you have to put in more energy than you get out in the worst cases. But it's still a strong variety of assumptions because we do not have experience yet. But one basic aspect was the companies claimed to make it safe and environmentally friendly, which means with 3 casings, the whole pad will be cemented so that nothing can happen. And this, of course, rises the costs, also the energy costs.
Thank you. There's a question with the lady over there.
Agnès Sinaï from French press. What do you think about the IAE last report on the golden age of gas, or so-called golden age of gas, forecasting that unconventional gas supply will more than triple between 2010 and 2035 and reach 1.6 trillion cubic meters? So they sound very optimistic. And so do you believe it's plausible? And do you believe in its golden environmental rules? Because there is also a report on golden rules for this gold age of gas. Thank you.
Oh, I have some comments.
Yes, Mr. Berman.
Again, if a retirement party is a golden age, then fine, we're in a golden age. We're using the last feasible resources for energy available to us, at least in Europe and North America. I don't see any cause for a celebration there. I think that the golden rules for the golden age are largely gratuitous. The IEA, I respect their work, but they take the view generally of an economist. And an economist looks at the situation, let's say, in the United States with shale gas, and he says, with all of this gas being produced, with all of this investment, then the shale gas must be commercial because these big companies are smart and they wouldn't be spending money if they weren't making money. Okay, so right there is the problem. The economist's view of shale gas is that, of course, it must be commercial. And of course, the economist arrives at these conclusions without ever looking at the balance sheets, without looking at the profit and losses of the companies involved. The geologist, the engineer, looks at it very differently, and he says, "I'm unconcerned for the moment with profit. Let's just take a look at decline rates and reserve forecasts." And what we see is that these decline rates that I showed you today have not in any way been incorporated into the kind of reserves that companies are predicting. And as we commented, as Werner commented, in the case of the Vaca Muerta Muerta Basin, the economics of that play and also the EROI is completely dependent on what reserve numbers you use. If your reserve numbers are half what you think they are, then your economics are much worse. And so we have a situation with the IEA where apparently they and our EIA in the United States, they're living in a golden bubble. They're taking this very optimistic view, and that's their privilege. But I would argue that they need to calibrate the golden age with the reality. So the Belle Epoque is right before the fall, is my view.
Thank you, Arthur. There's a question over here, and then you.
Well, the US had forecasted, let's say, in a recent past, 5 years back, to import huge quantity of LNG, and today the installed capacity of import is 150, 160 billion cubic meter per year, while in fact only 10 were imported last year. So there was a complete game change with the shale gas. Instead of importing 150, you import 10. And even part of this capacity is going to be turned as an export capacity, which means that some gas suppliers in the US are ready to commit on the long-term supply to this LNG export for a low price. Otherwise, it would not work. So how can you reconcile that with what you said, that it's only a rather short-term phenomenon, this very low price?
As I've told many audiences, my specialty is geology, not abnormal psychology. I can't explain the irrational behavior of human beings. All I can tell you is that that in the absence of critical thinking, what I see in the United States is that people say we're producing almost 23 billion cubic feet of gas a day from shale gas. How can you say it's not commercial? And I say the volume you produce has nothing to do with profit. It's simply the volume that you produce, and so I can't explain the logic of it except to say that we had similar arguments going on before mid-2008 as far as credit default swaps and real estate investments, that anyone who suggested that perhaps there was some impending risk, that this was a bubble that couldn't last, was ridiculed. We saw the same thing with the dot-com bubble in the 1990s when Warren Buffett suggested this was an unsustainable kind of a venture. He was ridiculed. And so I think we have a fairly good history of seeing that mainstream analysts who profit in the short term by these kinds of bubbles not only frequently but almost always get it wrong. And that's why I say that if your forecasts and predictions assume that the future will look just like the present, you will almost always be wrong. So that's all I can say to you. I base my conclusions on data, not what other people think. Most other people base what they think on what somebody else thinks, and that's a critical difference. I don't say that I'm smarter than they are. I just say that I go back to the data. The data doesn't support the longevity of these plays, not at present cost, certainly.
Last two questions, one over there and one over there before we go to the coffee break.
Thank you, Roman. Yves Cochet, member of the European Parliament, I'm French. It's for our European friend. You know that France has banned fracking last year by law, you told them. And I've been told that in United Kingdom, they are very excited by shale gas boom also, but they are ready to ban also by law fracking. Is it true or not?
As far as I know, their greatest concern is about earthquakes. And there's a recommendation by a ministry that once it can be proven that an earthquake larger than 0.5 as a scale can be traced back to fracking, then this should be stopped. So that's my latest knowledge about that case. It was from early in April this year. But the authorities are not unique there are different opinions about. But other cases like Bulgaria, it also has banned. Also Romania has stopped fracking. And in some other cases, like Poland, it has been overestimated. The resource estimates are shown to be overestimated by far. And even important companies have stepped out after they have drilled some dry holes there, where they had expected gas.
Thank you, Werner.
Okay. My name is Christoph Kiener. An additional question on these financial markets and financial situation of the shale gas companies in US. Do you know, to Art, do you know about the owners and shareholders situation? Is this more spread on private investors or individual investors, or is this more big institutional investors? Or pension funds who are or by bank loans who gave the money into these companies?
Right. No, that's a very good question. Thank you for that. The sources of capital are various. In the early days of shale gas exploration in the United States, much of the investment was in the form of equity. As time went on, more of the investment was in the form of debt. As time proceeded, more of the capital was raised by offering additional shares for sale, bonds for sale. More recently, it's been in joint ventures, where a joint venture partner comes in with cash and agrees to pay the majority of the drilling costs. So those are the sources of capital. The losers are the shareholders, of course. The note holders, the bond holders, at least so far, have not been damaged. Many of the loans have been renegotiated at a higher rate. The shareholders, I guess, they have to beware. It's their risk and their investment. But for instance, Chesapeake Energy's two largest shareholders, one which is a big pension fund, and the other is Carl Icahn, who's a big hedge fund manager. They have both told the management of the company that the current course is unacceptable. The major pension fund, I think it's called Southwest Management, they've even suggested that the company be sold, be liquidated, in order to make them whole on their investment. So, this is one company, but it is the second largest gas-producing company in the United States, and it is really the emblem, the icon of the entire shale gas movement. So I would watch Chesapeake Energy very closely over the next several months, because I think as goes Chesapeake, so will go the rest of the industry. A point that's important to keep in mind, however, is that for the large international oil and gas companies, the Exxons, the Chevrons, the ConocoPhillips, BHP Billiton, Statoil, Total, shale gas is a relatively minor portion of their entire portfolio investment. So perhaps these companies have 20 or 30% of their portfolio invested in gas. And therefore, if the shale gas takes a long time to make a profit or never makes a profit, it's manageable for them. The problem is for the companies that are exclusively into shale gas and shale oil, like Chesapeake Energy. They don't have the luxury of making money on other aspects of their portfolio, so they're much more vulnerable.
Thank you very much, Arthur, for being with us this morning, our afternoon. Thank you, the audience, for listening. Thank you to Werner, Zittel, and Euan Mearns for your great presentation. Final comment?
Yeah, just a short comment. The discussion on natural gas in general reminds me on the discussion on peak oil about 10, 12 years ago. At that time, oil prices were very low, with about $12 to $13 per barrel. And at that time, USGS published a new resource assessment there are very huge resources were claimed in the Caspian Sea, which would produce more than Saudi Arabia in some years to come. Now, 12 years later, we do know what has happened.
Thank you. Final applause.